Hello and welcome everybody. This is Chart Request Live. We do this show twice a week now, every Monday and Thursday. Should be at 1 o'clock Eastern time. Little mix up today. We got a Straza special here. So I am back on Chart Request Live. It feels good. Maybe just for one day only. I don't know, but I'm joined by my esteemed co-host and friend Alfonso de Pablos. What's up, brother?
Everything good. First time we're doing this show together, so very excited about that.
First time duo, live, on a show, but long time duo behind the scenes on the analyst team.
Exactly, like over 3 years. So we will show the people what we can do.
Let's do it. Do you want to dive right in? Do you have broad market thoughts? You got any charts that you want to see?
I have a broader market thought. I was looking at the dollar again up. Dollar has been very strong, bouncing off the lower ends of a multi-year range. But what stands out for me is the relative strength of equities, despite the dollar being so strong lately.
That's right.
That's the thing that I have right now.
So this is exactly what Alfonso is talking about. All I'm doing here is simply overlaying the S&P 500 with the dollar index, DXY. So you got stocks here in the maroonish color, dollar in black. Typically, we have a very strong inverse correlation between these two things. In other words, dollar going up, stocks peak, roll over, bear market for stocks until the dollar peaks and rolls over here in the Q4 of 2022, sparks a new bull market for equities. And stocks over the past couple years, Alfonso, right, have kind of been just steadily grinding higher and not getting a lower dollar, but getting a sideways dollar. What you're saying is that just over the super near term, we're seeing the dollar rise, a big move off of the September low. So it's been rallying for almost a month now. But look at what stocks have done. The S&P 500 just keeps moving higher in the face of it. So I think the way to look at something like this is let's remove stocks from this equation now.
Okay.
Is if that's it for the dollar. And I mean, look, that's not what I want to show. Here's the RSI 14. We're nearing overbought territory, coming out of oversold territory. This is a bearish momentum regime, trying to flip it here into a bullish momentum regime, but we're extended. So if, God forbid, shoot me for being so bullish all the time. If this is a peak, even a short-term peak in the dollar, and it rolls over here, which, like you're saying, we're not seeing, at least not today, you would expect stocks to do really well and be moving up into the right in an environment where the dollar, I don't know, heads back to the lower bounds of this very well-defined range. Did I steal your thunder, or is that kind of what you're thinking too?
Yeah, definitely. That's what I'm thinking right now. I don't know where the dollar will peak, but definitely if we get some weakness in the dollar, I think we will get an extra boost for equities in the coming weeks. That's for sure.
And no matter how you look at it, the dollar's getting extended here, right? So what does that kind of rollover move look like? This is just a 5-day rate of change I'm showing up top. This is really the best, streak of 2 weeks the dollar has had in this entire range. So, all right, we'll see. And then we'll see how stocks fare in that environment. Why don't we get into it?
Yeah, let's do it. Let's start with Nick. Let's take a look at TT. That's the symbol ticker.
So this is Trane Technologies. Bonds, do you know what industry group this one's from? You might be able to tell just by looking at the chart.
Building products.
Of course it's building products. This has been one of the single most strong industry groups in the entire market this bull cycle. Probably better than home builders, right? To put that in perspective, very similar. They move in the same way. So Trane Technologies, look, speaking of extended, here's the deal about momentum. Overbought can stay overbought. Look at this. This is incredible. This is like, this should be in a textbook, Alfonso. right? A lot of people try to fade momentum. We do the opposite. We use the RSI 14 in a very different way from probably most professionals. Things get overbought and stay overbought. Look at Trane Technologies. If you faded this overbought reading, I don't know what, late last year, Q4 of last year, what has the stock done? It's steadily grinded higher. It's just been stair-stepping higher the whole time. You get this nice little consolidation. I mean, this is the best buying opportunity that you had at the stock all year. Like this is your pullback. Wow. Right? Like this thing's so strong. Let's just illustrate that with a relative ratio. So this is Trane Technologies versus the S&P 500, straight line higher. Same thing. Look at momentum. I just pinged in overbought territory, like forever. And look, this is secular. You can zoom out forever on this. It's been a leader. It came out of a monster base versus the broader market back in, I don't know, 2019, pre-COVID. Came out of this base. So this move was already underway. This is the market telling you, hey, look over here. This one's going to be a future leader. That's what happened here when this broke out, right? So the question is, what's that?
No, that's right. I mean, relative strength, momentum in a bullish regime, you just show what the bullish regime is multiple times. The 14-period RSI hitting overbought levels, and in the small correction in this case, RSI is not able to reach oversold conditions. So that's what we know about of bullish regimes in this case.
And the question but the question with a chart like this becomes, like, where do I just find a responsible area to get involved that I can use as a stop? And when I fib it out, I don't have much. We're in no man's land right now. This is really where you want to be buying this. Like I said, this little consolidation from May to August of this year, that's your perfect entry. See, right as we're coming out of this range where I've drawn in navy blue here, bang, that's where you wanted it. You also, this was the 261.8% Fibonacci extension. I don't have the 161 on here. There we go. There's that, right? So here, I think you got to drill in and get super tactical, right? And I don't think something that's this overbought, you want to give too much space. You want it to work, or you want to stop yourself out. In other words, if it starts moving against you, there's just too much open space to the downside. Yeah. I think right here, call it 391.
Yeah, I feel that we're in the middle of a run in this stock. Definitely 342, the level you're marking up at the 261 was the perfect entry in this case. Something that I am seeing in that pattern is that failed breakdown in November. No, sorry, in let me see. Here in August of this year, it trapped the bears. It ripped higher, right? That's the perfect pattern.
So we always say we want to shake out before a breakout. We love it when the bears get a shot, right? Like that. It's like giving away the ball in a football game inside your own red zone. Just like giving it back to the other team. Giants did this yesterday, last night. You give it back to the other team with a ridiculously easy short field, to score on. And if they can't score, they can't get the ball in the end zone, like the Bengals last night, so bad. Thank God the Giants offense is just even worse. If they can't get the ball in the end zone, then it's like, oh, these guys got nothing. They got nothing, right? Let's turn around, run the ball down their throats. And then you flip it higher, you get the shakeout here, right? And then you go, and then you get the breakout right after it, shakeout, breakout. And then look at that tremendous follow through. So I'm totally with you. This was one of those non-tops, right? When they were printing in the home builders during the summer. Mm-hmm. So here's how I would play it. You got the bull flag right here, call it 390. We're at about 404 now. So give it 10 points of downside, maybe 11 points. That's less than 3%. And then your target's up at 480, this next Fibonacci. That's about almost 20%. That's a solid risk reward and a market leader.
Yeah, I like it. I like that explanation. Couldn't agree more. Are you ready for the next one?
Mm-hmm.
You want to take a look at GE?
Oh, General. The original General.
Exactly.
So you guys don't know, Alfonso and I talk about this one a lot.
Yeah,
And we were talking about
every day, basically.
we were talking about it just last week. Actually, we were saying, should we just buy this flag again? This thing's going to go. And look at you now, GE. We knew you were going to go. Sometimes these patterns are tough. They look extended. Yeah. You know it's about to go on to be more extended. I love this momentum profile. This little dip. Never even got like under 40. Barely under 50. It speaks to the underlying trend. It speaks to the strength of the underlying trend. So here's what I want to do with GE. I'm going to make this quick. This is a beautiful chart, and I know we talk about it on here enough. You got this little saucer. Bang, that resolved higher. But it wasn't even so much this pattern here, which is pretty clean and beautiful. And speaking of shakeouts with breakouts, I mean, look, I get excited when we start talking about this topic. I'll start drawing all the charts this way. But you had a similar situation here, right? This was the August 5th yen disaster, Bank of Japan situation day, right? And look, same thing, just like Trane Tech in the chart before. But I want to go back. I want to go back and give some context here for this trend.
Wow.
So this is really the situation for GE. This is a monster base and the largest industrial company in the world. It just resolved. And by that, I mean, we just finally took out the 2016, 2017 highs here. And then this little coil that we just drew up with the little shake move here, printed right on top of it in a very disciplined way, right? Like a lot of times you'll see a little shake below, be chopping around down here, then you scoop higher and go. Like this held it, except for that one day that we circled, August 5th, which was like the crazy volatility day. Outside of that, really held those 2016 highs, broke out right into a tight flag, breaking out again. Okay, where do we get in? I think you want to go big or go home with a chart like this right now. So if you can give it space and that makes sense for you, I think you give it to the bottom end of this bull flag around 183. If you have a longer time frame, much longer, and you plan to hold this for years, I really think you could give it back to 170. Back above, as long as this base holds. Even if it doesn't, probably okay. Then let's zoom way out on the chart and find an area of past price memory.
Because we have a critical resistance level from 2007 right there. We're very close, so it may be a little bit difficult to define risk at this point.
Yeah, look at that. So we're running, this is what Alfonso's talking about. We're running right into the pre-financial crisis high. Then that's a big level. This is just before the bear market of 2007 or 2008 rather. That was the high. So we're running right in that level now. You almost want to wait and buy the strength above 200 if and when you get it. I think 200 gets you 300, and that's a monster move. This old high is about 290. You're probably going to overshoot it, right? If and when it happens. So let's be patient with GE right now. Look at where it's come from. Wow. Right? I mean, if any stock in the market right now deserves a breather, it's GE.
I mean, and if you look, that's like a massive double bottom, like a classic double bottom.
I think GE is going so much higher, but it's the kind of price chart at this point where you really want to be patient with it. And the longer your time frame, the more liberated you'll be to kind of let it dance. And when you see a chart like this, like Alfonso's saying, this is a structural double bottom. You really expect to get new all-time highs eventually, but it could take years climbing up the right-hand side of a 2.5 decade base, 25-year base, right? So let's be patient. Let's wait. Let's buy an eventual breakout above this 200 level with a target. Call it 290, but you'll get 300. You always get to overshoot, So that's the trade for GE. I think GE right now is better for longer-term traders rather than short-term speculators.
Right. Yeah, I agree. I like it. So now let's take a look at VRNA. I love that base.
Verona.
Mm-hmm.
Wow. How do I not own this one?
I don't know. You tell me.
I missed it. Look, we've been putting out, so many bullish trades on biotechs.
Yeah.
lately.
I know this is a hot corner name.
Oh, I really screwed it then. I really screwed the pooch. How'd I miss it? I don't know. But look, the base is perfect. That's the idea here. This base is so good. Let's draw this up nice. Boom. Yeah, if I bought all the biotechs that we've written about since this summer, my account would be all biotechs. I have 50% biotechs. That's how hot this group of stocks is right now, though. Like, no, that's information. Like, literally, every time we write, or you or Sam, you do a post, and then you guys will ping me and be like, look at this biotech. It looks so good. You guys have been doing that nonstop for 3 months now. I own so many biotechs. I built my own biotech fund. I'm like a biotech fund. So something like this, you fib it out. We're probably hitting that first target just about. Yeah, perfect. So first target, 40.50. Again, something like this. The last two charts too. No man's land. Look, these are all great charts. Trane Technologies, GE, the Verona Pharma, fantastic charts. Problem is, they're not clean enough for me to act on any of these today. GE 2-3 days ago, we could have acted on the bull flag for a short-term setup, right? But that trade's already probably halfway over. Again, it's like $150 billion. What's the market cap on GE now? It's a monstrous stock, right? So you got to think about that stuff when you think of the reaction rally you'll get from a pattern. Verona Pharmaceuticals is sitting right in between these two targets. It's about $8 or $9 from our risk level of 26. It's another $6 from our target of 40 and change. That's not great. So what you want is leadership stocks like this, great looking chart patterns, but you want to get them when they're here, right? Where we have this clean level, look, touch, breakout, test, and then go. You wanted this at 26. Here, it's a lot tougher. So if we zoom in, let's see what we could do. Yeah, it's just not a stock I'm buying today. It's really not.
Yeah, there is no clear level to define risk. I mean, the way I see it is, or whether you wait for a pullback towards 26, or wait for this one to consolidate on a healthy way, try to find some resistance where you can define some risk in the short term. Maybe if it hits the target at 40-50 level, I think you can expect some consolidations at the 161 extension. So until then, I think it is a little bit hard to define a risk. But the chart looks great, and I think it will go much higher over the long run. That's for sure.
I agree with you. And if you get some sort of chop here, bang, 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 you have some levels in the future, right? You got the pivot highs from September, 30 and change, maybe 31. Pivot highs from just last week before this tiny little flag broke out, call it 32.75, 32.80. And then you're right, Fonz. I mean, it's 20% higher, but you got the target up here at 40.50. So those are the levels I'd be paying attention to. And if you get a pullback in something like this, market weakness, some election volatility, whatever, you got this stock on your, watch list. If you get a pullback to this 26 level, that's really where I want this one, right? Yeah. I want this back at the former highs. If you get another retest all day, you might not get it with a stock this strong. All right, what's next?
So now let's take a look at some of the chats. So Donovan was asking us about CART. You know this one.
I love the Maple Bear. I'm one of their best customers. They've really spoiled me to the point where I don't know if I'll ever go to a grocery store again. I hate grocery stores. One of my least favorite places in the world.
This one is very similar to the previous ones. I mean, breaking out of that IPO high to new all-time highs. Very similar the logic behind this potential trade, right?
So I almost feel like on somebody in the chat just heard me complaining about not having a clean actionable chart yet, and then they gave me this, because this is exactly what I'm referring to. This, like the three that we already discussed, really, really nice looking chart. It's become a leader, showing some relative strength now. Got the base breakout. You're above the V. This is the IPO day candle. And just look at how clean this breakout is above This is its IPO day, chopping right on top of it. So if you're above 43, go ahead. You want to use the closing high from last month? 42.20. You're above there. Long all day. Target 55.
Yeah, so Brooklyn level to define risk. Beautiful base. Momentum is in a bullish regime, even though it's marking a potential various divergence, but nothing there right now. What I like about these charts, and I told Patrick every time, is if you can define a risk and you can find a place to do it with no looking like too many points in the chart, just, hey, this is my point to define risk. That's the perfect trade I want to take.
I think this is also a really exciting fundamental story. The analyst community would tell you that this is a low margin business. There's nothing here, tiny, tiny, tiny margins. First of all, this company IPO'd already profitable, making money, the business model works. Second of all, speaking of margins, they provide a product that is so wildly convenient for people. When you make a convenience breakthrough for consumers in the way that Instacart is, you tend to have a service that is incredibly price inelastic, which means you can raise the price and the demand doesn't change much. In other words, if these people are making people's lives so much easier, maybe we'd be happy to pay another 10%, 15%, 20% for the groceries that get delivered, right? So I think you get margin expansion there eventually because people really do love the service. I'm one of them. What's next?
Let's take a look. Joe was asking us about CORZ. Course.
The course.
You know this one.
Yeah. Taste the Rockies. Did you get it? You know Coors Light is?
Sorry?
Nothing. So Core Scientific is a Bitcoin miner turned AI compute story, from what I understand. They can't make up their minds, Alfonso, these Bitcoin miners. They wanted to be Bitcoin miners. They rushed to market to be Bitcoin miners. Then all of a sudden the AI thing started happening and Bitcoin was sideways for 6 months. And they said, we're not Bitcoin miners anymore. Now we do big data, AI compute stuff. I wouldn't be surprised if in a couple weeks or months from now, as Bitcoin looks like it's ready to break out of this range, if they decide that they're Bitcoin miners again, some of these guys. So for now, though, in the Bitcoin mining space, we still have to consider Core Scientific among the Bitcoin miners. And there are some big winners and there are some big losers. I know Sam's working on a post right now. It should be published any minute about Core Scientific. It's got a pretty hefty short interest, so we'd love seeing that. And look, the more important part is this one's trading at new all-time highs. No other Bitcoin miner can say that. Breaking out. If you're above 13, long all day, next stop 1750. And I think you could definitely buy weakness back towards this breakout level here, if you get it. Right? Call it 1180, 12.
Yeah. Mm-hmm.
And I think eventually you get a really nice move out of this range. I don't think, crypto's doing well like they're doing today could be a bad thing for a stock like Course. So 12, 13, target 1750.
Yeah, I like it. I mean, and if you look at some of the other Bitcoin miners, you can take a look at MicroStrategy making new all-time highs. Robinhood, even though it's not a miner, it's a crypto-related stock making new highs too. Today, Mara riots are up around 10%, so it seems that they are waking up. So yeah, it makes sense, this trade in CORZ.
And the kind of the action I'm seeing over the short term, just from a tape reading perspective more than anything, following all the Bitcoin miners very closely. I'm long a lot of them, just looking for levered vehicles to give me exposure to crypto, always. Yeah. I think Bitcoin breaking out, the crypto's breaking out, you actually want to lean back into the worst ones, the riots and the Maras and the Clean Sparks, the pure Bitcoin miners. None of this AI stuff. And
that will make sense.
Yeah, I think they're going to play major catch up because they're the most levered to the price of Bitcoin. Haven't been working, so I think there is a catch up move kind of baked in there. And then look at this momentum divergence. This is Core Scientific relative to Bitcoin miners. It's a fund, WGMI, but you got higher highs in the ratio, and you've been getting lower highs in momentum all summer long. So that's interesting. Maybe you get some rotation back in to the junkier ones, or at least the laggards so far this year, like Mara. We were talking about this one offline. I like Mara maybe even more than Core Scientific here. I think it's definitely going to deliver more higher beta.
Yeah, beautiful.
Look how clean Mara is. So I think a lot of these names, grab a watch list, chart them out, pick your levels. But I think these Bitcoin miners do offer really nice vehicles in an environment where Bitcoin and friends are finally resolving their ranges higher. So here's Mara. Here's a bonus chart above 19, long all day, something like this.
Yeah, and if you drop the VWAP from that peak from 2021, it's right there. I mean, price is reclaiming that level. So it's a confluence of resistance right now. So I think if we break above 19 or something, 18, I think we can get a squeeze higher on this one. That's for sure.
And look at this, Alfonso.
Yeah.
Look at the momentum profile. So Mara has fallen from 31 to below 15, so more than 50% drawdown from its high to its low this year. Yet momentum doesn't even get oversold with a 50% drawdown. That's how these stocks move. So that's absolutely crazy, and that really stands out. When we bet on things not being tops, right, which we've been doing a lot. Talk about these. Oh, that's a textbook non-top or whatever, right? So I could draw this up like this, just the same. And what I love to see when I want to bet on something not being a top is it not getting oversold during that distribution phase. And that's the case with Mara right now. So like it a lot.
I love it. And I think it will make sense to see that catch-up trade on these miners that have been laggards during the past few months. So that will be very, very constructive for the crypto space in general.
And just some quick color on that. You said catch-up trade. Catch up to what? The best crypto stocks breaking out and making new highs. Let's just show that really quick, right? So here's MicroStrategy. Sideways since March, breaking out of this range. Mm-hmm. This is the best crypto stock of all crypto stocks. This is Galaxy Digital.
Oh, wow. This one looks very, very good.
Sideways for most of this year, much of this year, right? Trading in a big range. Breaking out here. And speaking of VWAPs, right? Look, you got the VWAP from 2021 highs coming in right there. Okay, one more. Robinhood has emerged as the premier crypto exchange, broker, whatever. Sideways for a good deal. Since, I don't know, June? Breaking out. New highs. So I think this bodes well for the entire crypto complex, seeing the crypto leadership stocks breaking out.
Yeah, I couldn't agree more. So get ready. I mean, if Bitcoin breaks above 70, I think it's time to own these miners. That's for sure.
I'm with
you. You wanna take a look at another ones? Couple more.
Yeah, let's do it. We got till 2 o'clock.
Yeah, perfect. Let's take a quick look at WSM.
Williams-Sonoma.
Is it ready for the next leg up? They're asking us in the chat.
It's a great store. Great store. My mom loves a good Williams-Sonoma. Look at this candle. Is this do I have bad data? What happened on May 22nd? Oh my.
Wow.
I mean, that was earnings.
Yeah, earnings. Wow.
I mean, what did they say on that call? Right?
I think this is the largest engulfing I have ever seen in my life.
Wow, that is really something.
So
you got a clean range here. Look at this, Alfonso. I mean, this is what we just talked about, right? Because I could draw this up top in the price chart. I could try to draw this like a top, right? Look at momentum. I would never draw that like a top because this
Exactly.
momentum.
Yeah,
That reminds me of the home builders.
So looking at momentum never hit oversold conditions during this sideways phase, it makes me think that we will eventually get like an upside resolution, because we have seen this exact behavior, this is exact pattern in the previous stocks we have covered today. So all of them have broke out. So I don't think this one has to be any different.
Nope, you're absolutely right. I actually think you could use this 161.8 and jump your entry on it.
Yeah.
I think you could be that confident that this range eventually resolves higher. I also think you can navigate through it using some key VWAPs here. If you drop a VWAP from this monster bearish engulfing earnings candle, look at the volume. Great place to drop a VWAP.
Yeah.
Right? We're just back above it now after being below it for 2 days. If I were to drop a VWAP from the closing high of this range, back above it. Right? So
that gap previous the consolidation. Do you like it? Do you like to drop a VWAP from that massive gap previous to the consolidation? Yeah, right there.
Absolutely. That's another thing you can walk out. Yeah. And look, all right there, price is above it. I think you could jump this. If you want to use 149, great. You want to buy it right here, great. If we fall now back below this 142 level, you're probably going to revisit the lower bounds of this range. So be aware of that, right?
Yeah. And even though it hasn't broke out, I think for me, especially for me, momentum, it's giving me that extra conviction that it will resolve to the upside. I don't know in what direction it will resolve or how long it would take to resolve. But definitely momentum, it's giving me that conviction that sometimes other stocks don't show me.
Alfonso, this momentum profile is really as bullish as it gets. The last time this stock has been oversold, hasn't even been close to oversold, since September 2022. The bear market lows, basically.
Mm-hmm.
So you had that nice base kind of form right here. But what a strong stock. I mean, I love this momentum profile. You're absolutely right. So let's say 149 long, target, next fib, 210.
I like it. That's how I play it.
All right, let's do one more before we get out of here.
Yeah, let's do one more. Let's take a look at LAMR.
Lamar. This is that advertising company.
I remember that we discussed this one like 2 months ago. It was coiling. It broke out. But look at that. I mean, if you zoom in that coil right below that former highs from 2021, we had again a shakeout, and then we made a decisive upside resolution. You know, wait to see.
You're talking about this?
Yeah, it tries to. I mean, like a short-term tapping pattern. Like this year's consolidation. I mean,
same pattern.
Exactly. Yep.
Didn't even really get a good retest in of the lows.
But beautiful chart. I mean, beautiful chart. I have been following this one for a long time.
Barely oversold here. Just to follow up with what we were saying about the last chart. Barely oversold. Other than this big spike down, which again, I qualify when I look at these charts because this is August 5th. The entire market panicked for, I don't know, a full 30 minutes until 10 o'clock Eastern time that day when everything was okay after that. But this was the massive VIX spike. Everything was selling. Momentum barely gets oversold. I would look at something like this. Bullish momentum regime. I wouldn't even count it. Throw it right out. And then you get the breakout. A breakout right into a sweet coil. And we'll fib this out and give a price target. This is nice. And I think you could use this little flag here to manage an entry right here, right now. So let's get a fib. Let's get a target on this. Beautiful base. Beautiful base.
No, and momentum getting overbought immediately, like 2 weeks after that day that it hit oversold. That's enough conviction. Yeah, that's enough conviction that that this break it's completely valid.
So look, when you zoom in here, everything is saying yes, buy. So I think you could play the flag breakout. Use that closing high as your stop, maybe. So I would do it like this. Flip it to a line. Boom. There you go. That closing high from late September, 135, 50, 136, whatever. We're above there. We're slightly above it now. Target 153. Play that flag breakout.
I like it.
The resolutions from these really short-term, high and tight consolidations tend to be explosive. In fact, the way to calculate the moves of this type of a pattern is actually to measure what you call the flagpole out. So if we were to measure the flagpole, and there's different schools of thought, you could do it on percentage terms, you could do it on points terms. I'm going to tell you right now, it doesn't matter. Look, because either way, if I tack on 25 points from this breakout level, so 135, tack on 25, that gets me at north of this target to about 160. And if I tack on 22%, which is the flagpole, even better. That gets me to, I don't know, 164, 65. Wow. So either way, they're favorable price targets is my point, right? So you play this flag breakout, and I think you get north of 153, maybe even all the way to 166, right?
Yeah, and this is the beauty of technical analysis at the end of the day. Not only trade on different time frames, but trade on different ways and have multiple alternative the way you want to play it.
Exactly. They give you a variety of tools, and that allows you to craft the trade in a variety of different ways. There isn't so much a right or wrong way to do it as there is finding the right or wrong way for you, right? Exactly. Right. So what's right for me, maybe the way I measure this target out, for me, my time frame, my risk preferences might be different from the way that you measure yours out and develop a price target and a risk level and all that jazz. It doesn't mean that one of us is right or wrong. It just means we found what worked for us. And technical analysis gives us a beautiful, beautiful suite of tools to kind of craft our own trades and find our style. How'd I do?
Perfect. That'll be a short video.
So, speaking of videos, we are now officially 2 minutes late to our video call that we have with clients right now, which we do once a month, where we do like a full Q&A for the analyst team with all of our clients. It's such a good time. We are going to sign off and go do that. Alfonso, what a pleasure joining you today on CRL. You guys have been doing such a great job with this show.
Oh, man. I'm very happy that you to join us.
I miss it. You know, this is one of the, I think, most fun things that we get to do.
It's therapeutic.
What?
It is therapeutic. I mean,
it is.
Just look at the chart and analyze from an objective way. It's super cool.
And I used to get good ideas from this show. Now you guys don't share the ideas with me, so I'm losing out on that data. All right. Thank you all for joining us, as always. Couldn't do the show without you. So join us again on Thursday, 1 o'clock Eastern time. I think Fonz will be here, maybe Patrick. I don't know. We'd like to surprise you guys. Everybody, happy Monday. Have a great rest of your trading day. We'll see you out there.
Bye, guys.